All right, welcome back, guys. I've got a couple of things that I want to talk about. So, we have, first of all, the government coming back into operation. We've had interesting amounts of turmoil in the past couple of weeks, but what we know now is that the government shutdown is officially over. Now, we've also had some other interesting things happening, like Michael Burry from The Big Short is closing his hedge fund now. Part of the reason is because he says he felt like he wasn't able to align his predictions with the valuations that the markets have been given. The long story short is basically that he kept thinking that the market was going to crash and it wasn't crashing. So he's decided to throw in the towel. What was kind of funny about this is that the markets actually kind of went down right after he threw in the towel. So I think he threw in the towel somewhere around here, I think. And you can see the markets have been going down as of late. It's probably at least in part due to people becoming more aware of the fact that AI might a little bit be too much of a bubble. You even have people like the Palantir CEO warning that some AI investments may not create enough value to justify the costs of those investments. And so when we take those aspects into consideration, uh, there are people out there talking about how this is an everything bubble. If you have been following gold has done this really crazy thing where it skyrocketed and then it crashed down and then it's coming back up. So it's still uncertain what's going on here. And whether you're talking about gold or S&P 500, real estate, everything seems to be like they're at all-time highs, and it feels like people don't know where to put their money into. What it seems to be the case is that hedge funds are trying to pull their money out of the market, but then retail traders keep putting money back into the market because they don't really have a better place to put it. Now, hedge funds might start pivoting towards private investments like private companies or maybe smaller contract based companies and things like that. We're not sure. At least not now where the retail investor is concerned. Truthfully, it doesn't matter because even if hedge funds are moving their assets towards non public areas, there's no way to really capitalize on that. So we just focus on what we can in the public sector and where things are moving there. So the Fed decision seems like it may be swapping. Right now, it's approximately a 50-50 chance of a 25 basis point increase in December. Before, it was a lot more certain that there was going to be a 25 basis point decrease. Excuse me. But now you can see the probability has dropped all the way down to 50%. Are stocks potentially overvalued? And is Powell concerned about that? Is the unemployment rate too high? If we take a look at the situation across other places in the world, you can see that unemployment is actually doing a little bit better, but that's not to say that America is. So we have to be cautious here because the unemployment rates are not being reported yet. There's still a lot of darkness around, okay, what are these unemployment rates in America? What does that mean for the Fed decision? Fed has stopped quantitative tightening, which is another bullish thing generally for the markets. But what are they going to do next? Because it floods the markets with currency. But there have recently been some small defaults in. I've been hearing about some defaults, um, but I don't know how big of a deal it is. It seemed like maybe a risk factor to take into consideration. So you have all these potential risk factors, all these things that are kind of spooky. Is the AI bubble starting to pull back and collapse? Maybe, who knows? But one of the things that I think people should take in mind is historically the S&P 500 doesn't drop that much, maybe at most 15%, or what is this, like 30%? Whereas if you miss out on the gains, historically, if you're blind, then you just bet on the market and generally you do pretty well. You can see there was this dot-com boom and bust. That segment wasn't so great, but then it comes back up. 2008 recession comes back up. So yes, people will say things like you can't time the market, and realistically there are multiple drawdowns like here and here and here, and it's true, it's hard to time those things, but I think you can kind of read the winds and see where things are going from a macro scale. AI really needs to make money in order to justify everything that's been going on. And right now, China just released another model called the Kiwi, China Kiwi LLM model, Kimi K2. This language model is another dangerous thing for the world because it is extremely cheap. It was only about $4.5 million to train it. And it is very small. So you can deploy it on small machines. Small companies are able to do this. And it's open source too, which means that you can copy it over. Now, I personally think that that's going to be a really good thing for society, but I think that a lot of people in the meantime are going to be really concerned about what that means for investments in current AI companies, because current AI companies have these massive valuations, and semiconductor companies, data centers, all of them have massive amounts of money getting sloshed and thrown around, partially because the justification is, oh, well, we're going to make tons of money off of people who are buying our stuff. But if the cost of the AI itself is cheaper and people can get it from elsewhere, you don't need as much computational power. You don't need to rely on big companies to host or build those models. And you can fine tune it a lot more easily. So small startups are going to have more of a chance to do stuff. That's pretty dangerous for the existing big players. And I think what we're probably going to see is a lot of pullback from these companies. If you look at Meta, it's a great example of punishing spending too much. You can see they're already down 14% the last month. Basically, they had an earnings call and they said, yeah, we're spending a shit ton on, a crap ton on AI, and this is where things are going next. Now, they've probably done a good thing in that they are trying to capitalize on this AI and machine learning momentum, but can they deliver that in a way that makes investors more confident? Well, I think at the end of the day, you have to put your money where your mouth is. And if Zuckerberg and Meta is able to pull it off, I think we'll see that in future earnings calls. That's when investors are going to start to buy into it more and gain more confidence. In the meantime, though, it's probably going to be a while of investment. You can see they're spending money on these data centers, they're spending on AI impact and things like that. So yeah, a lot going on there. Who knows whether it's going to pay off for them in particular, because again, it's kind of like digging for gold. The people who are going to make the most money are probably the people who are selling the shovels. And you can see that with the consistent rise. Now, are these folks going to be able to continue capitalizing on all of the semiconductor demand? Maybe, but NVIDIA has a lot to prove, because there are lots of other companies that are starting to say, hey, any kind of semiconductor, maybe cheaper, maybe you have like a faster processor or something. So you have lots of potential candidate companies trying to muscle their way into this space. But of course, the supply chain is really complicated, and there's a lot to the process that NVIDIA has really locked down, which is why you see them as one of the front runners. But I think it's always important to keep in mind that when everybody is super hyped up about something, maybe it could be a bubble. You can see there's definitely a bit of a run back here in early 2025 of this year, which was because of the tariffs. So if there are any US China issues going forward, you could see another dip back, just like what we did see before. Realistically, I think that it makes sense things are going to keep picking up because as AI becomes more and more useful and as it becomes smaller, we'll be able to deploy AI on smaller and smaller devices. So just like how now you have smartwatches that are able to do a lot more than they were 20 years ago, I think that AI, large language models, conversational agents are going to be a natural part of what people expect from the technology around them. Maybe your camera talks to you, maybe your phone talks to you, maybe your, I don't know, stove or dishwasher talks to you, and maybe it's an advancement of the Internet of Things. These are just some of the things that I'm thinking about. I don't know whether they're true or whether they're accurate, but I thought I'd put that out there as food for thought. All right, thanks for hanging out today. Hope we can continue to see what happens and learn and grow together. All right, have a good one, guys.